Imagine waking up one morning and discovering that a single technology is changing the future of the entire world. That technology is artificial intelligence, better known as AI today. AI is transforming industries faster than almost any innovation in history. And wherever innovation goes, investors quickly follow. Billions of dollars are flowing into AI companies every single month. Everyone wants to invest before the next big breakthrough happens. Some people believe AI could create the next generation of trillion-dollar companies. Others believe investors are getting carried away by excitement. So what's really happening? Is AI the opportunity of a lifetime? Or is it another investment bubble waiting to burst? Let's take a closer look. Artificial intelligence is no longer science fiction. It already helps doctors diagnose diseases. Banks use AI to detect fraud within seconds. Factories use smart robots to increase production. Self-driving technology is becoming more advanced every year. Businesses use AI to save time, reduce costs, and improve productivity. This isn't just a trend. It's becoming part of everyday life. That's exactly why investors are paying attention. When a technology changes the world, it often creates enormous business opportunities. And where businesses grow, stock prices often follow. But investing isn't just about following the crowd. History has taught us this lesson many times before. Every major innovation creates excitement, and sometimes that excitement turns into speculation. So before investing in AI, let's understand what's really driving this incredible boom. So, what's fueling the AI revolution? It all starts with one essential component, the AI chip. These powerful processors are designed to handle billions of calculations every second. Without advanced chips, modern AI simply wouldn't exist. As AI becomes more capable, the demand for these chips continues to grow. To support that demand, companies are building massive data centers around the world. These facilities contain thousands of high-performance servers working together around the clock. Every AI model depends on enormous computing power, and that computing power requires huge investments. Technology companies are spending billions to expand their AI infrastructure. Governments are investing too, hoping to stay competitive in the global AI race. This isn't just about software. It's about chips, cloud computing, energy, networking, and advanced hardware. Entire industries are growing because of AI. That's why investors see enormous long-term potential. When businesses grow rapidly, investors naturally expect future profits. As expectations rise, stock prices often rise too. But there's an important difference between a great company and an expensive stock. A business can be outstanding, while its stock price still becomes overvalued. This has happened many times throughout financial history. When excitement grows faster than business fundamentals, investors can start paying prices that are difficult to justify. That's when caution becomes just as important as optimism. Smart investors don't buy simply because everyone else is buying. They study the company's financial performance, they evaluate long-term growth potential, and they understand the risks before investing. Because successful investing is driven by informed decisions, not by fear of missing out. So, does that mean AI is a bubble? The honest answer is no one knows for sure. AI is a real technology with real-world applications, but that doesn't guarantee every AI company will succeed. History has shown that many companies disappear, while only a handful become industry leaders. Think back to the early days of the internet. Thousands of internet startups were launched. Many attracted huge investments, but only a small number survived and built lasting businesses. The same pattern could happen in the AI industry. Some companies may become global leaders. Others may struggle to compete. That's why diversification is so important. Instead of relying on a single company, many investors spread their money across multiple investments. Some even choose AI-focused ETFs. These funds can provide exposure to multiple AI-related companies in one investment. Diversification doesn't eliminate risk, but it can reduce the impact if one company performs poorly. Another common mistake is chasing hype. A stock isn't automatically a good investment just because it's trending. Smart investors focus on business fundamentals. They look at revenue, profits, cash flow, and long-term strategy. They don't let social media make financial decisions for them. Patience often beats emotion in the stock market. Building wealth usually takes years, not days. The goal isn't to find a quick win. It's to make consistent, informed decisions over time. Because in investing, discipline often matters more than excitement. So, what can we learn from the AI investing boom? First, never invest based only on headlines or social media trends. Take time to understand the business behind the stock. Look at its products, financial performance, and long-term vision. Second, avoid putting all of your money into a single investment. Diversification can help reduce risk during uncertain markets. Third, remember that market prices don't move in a straight line. There will always be ups and downs along the way. Short-term volatility is normal, even in strong industries. Don't let temporary market swings control your emotions. Successful investors stay calm and stick to their strategy. They make decisions based on facts, not fear or excitement. From healthcare and education to transportation and finance, its impact is only beginning. But remember, great technology doesn't automatically guarantee great investments. The strongest companies are usually built over many years, and successful investing requires patience, research, and discipline. The biggest opportunities often reward those who think long-term, not those who simply follow the crowd. The AI revolution is still unfolding. New innovations will continue to create new opportunities. The key is learning how to separate real value from market hype. Because informed investors don't chase trends, they understand them. Before making any investment decision, always do your own research. Consider your financial goals, your time horizon, and your personal risk tolerance. Knowledge is one of the most valuable investments you can ever make. If you enjoyed this video and found it helpful, consider supporting the channel. Leave a comment below and let us know your opinion. Do you believe AI is the investment opportunity of the decade? Or do you think it's a bubble? Thanks for watching, and I'll see you in the next video.